Everybody, it's Friday, the 16th of April, 2021. I hope you had a good week of trading. The markets obviously did well here. Semiconductors, the exception. They were underwent a little bit of profit taking, still up 15.5% year to date in one of the stronger sectors. So I don't think there's anything to be really concerned about there. But let's take a look at the charts and try to make some sense of it. As we know, the volume weighted average price from this peak held as the area where buyers were found along with that 50-day moving average 3 weeks ago. And from there, we've had, I think, 2 down days. One of them came on Wednesday of this week. And I think a lot of people thought, hey, that's got to be the end of this rally. But then Thursday, we gapped up and continued to move higher once again. So as usual, when we're above a rising 5-day moving average, it is innocent until proven guilty. There's no such thing as up too much if there's still more buyers in the market. And that's exactly the position we have now. Early next week, I think you could look at the 2-day volume weighted average price for shorter term traders, and then the volume weighted average price from this gap, which is where we saw the buyers congregate along with that rising 5-day moving average this week. So those 2-3 levels are what I would be looking for as far as where the buyers might be found on pullbacks. Most notably 413.5. That was this little peak, and where the 5-day moving average is now. But you just can't argue with this type of strength. You can argue logic all you want, but the fact is, and the reason I say it all the time, only price pays, is because that's really, at the end of the day, the only thing that matters. We can listen to all kinds of arguments, that there's not enough volume, or the breadth isn't good, or this is diverging, or that's diverging, or this relationship should be something that it's not. But the fact is, stocks keep going higher, and that's why we invest. That's why we trade. We get involved to make money, and the only way that we keep score is through price. That's the only thing that matters at the end of the day. That, and of course managing risk to make sure you protect your profits. We saw the breakout a couple weeks ago in the Nasdaq beyond this little band of resistance, and since then we've had this phenomenal run. We briefly tested this prior peak right here, and instead of failing there, obviously the buyers showed up on Thursday and took this market back higher. That was also the rising 5-day moving average. So I think next week an early level to keep an eye on would be about 336.5. Don't fight the trend. You will lose your money, and that's what you deserve to have happen when you fight these types of trends, because it's clear the buyers are in control. The Russell 2000 is a little bit of a laggard here lately, and I've been looking at this thinking that it's more than likely going to resume to the upside. And in order to get some confirmation of that next week, we're looking at a 30-minute chart here, meaning each candle is 30 minutes. Let me just squish that down a little bit so you can see up in here is where it says the time frame. Each one of these candles is 30 minutes. So when we look at this, you could even say that this might even be creating a little bit of a cup and a handle here, breaking beyond that high point with a stop down below here. I think that you would be in good shape to see the Russell 2000 go back up towards that new all-time high, and we'll take a lot of stocks with it. Now, a little bit of concern in that some of the bigger momentum names have been declining lately, but it hasn't spilled over to the primary indices, and that's more of what matters. So even with a strong market, you still have to take each stock based on its own merits. And here we are, coming into earnings season. We saw the banks started off this week, as they always do. Next week, we'll start to see the earnings pick up a little bit more. Then about 3 or 4 weeks out, the earnings will really start to flow, and that's where you have to be very careful about what you're holding overnight. The semiconductors, as mentioned, they were down a little bit this week, but they're still holding up rather in a tight range. We've got that 20-day moving average coming up, rising up to catch it. So this market is correcting through time, going sideways rather than a deeper price correction like a price correction we saw over here. A time correction is more bullish because it says we still have buyers in here. The sellers aren't aggressive, and there are buyers sticking in bids. They're not chasing offers, but they are sticking in bids and supporting prices in here and still finding that perceived value. If we were to break below and hold below 248-ish, then I would have a little bit more reason for concern next week. But as long as we remain above that, I look at these semiconductors as innocent until proven guilty. The biotechs, again, they bounced this week from that 200-day moving average. That's the third time they've done so in the last month and a half. But right now, they're having a little bit of trouble, it appears, with the volume weighted average price from the peak. That's that red volume weighted average price. If it can make it up through there, I don't think they're going to make it much beyond 156-ish on this rally, simply because we have the year to date, that's that blue volume weighted average price, along with this green declining 50-day moving average. So it's more than likely, if it rallies up to there, maybe it consolidates a little bit and starts to rebuild some momentum for upside. But right now, you have to treat this simply as a bounce in the biotechs. The financials, they pulled back to this prior peak and held this week, so they continue to chug higher into all-time high territory. Continued strength there. Tomorrow, by the way, if you just follow me on YouTube, you may not know that tomorrow there's a Chart Summit event. I will be speaking at noon Eastern about anchored volume weighted average price pinch setups, and this is something I've never spoken about before, in a presentation type of form. So if you're just following me on YouTube, you're missing a lot. Go over to Twitter. My username there is Alpha Trends, and I'll talk about some stock setups tomorrow in that as well. Also, I'm thinking about probably doing a live charting event next week sometime, maybe Wednesday at some point after the close. And the only way you'll know about it is if you follow me on Twitter. So head over to Twitter and follow me. Have a good weekend. Thanks for tuning in.